Okay, how do you generate trade idea? Okay, so welcome to this brand new episode for the video series Professional Retail. Now, generating trade ideas, right, is basically the most important, right, if not one of the most important aspects, right, in the entire trading process. Okay, right, because obviously, right, if you don't have a trade idea, right, you basically are not able to implement or take the trades and basically make money from trading. Okay, so how do you generate trade idea? Okay, before that, as usual, hit the subscribe and hit the bell, and also leave the comments and feedback in the comment sections, right, so that I can go through it, and if I find your comment is very valuable, right, or your question is very valuable, is a very high quality questions, right, then I will specifically record a video just to answer your questions, right. A very good example will be this video, right, because some of you has asked me, right, how professional traders actually generate trade ideas. Okay, so this is how. Okay, now before that, let's go to the take a look, right. We take a look on a typical, right, a typical retail guy approach, right. A typical retail guy, how a retail guy generate their trade ideas, right. Typically, a retail guy, right, when they want to trade, right, when they want to trade the markets, right, the first thing they do is that they just go to a computer and they just pull out the screen, pull out the charts. Okay, not the screen, pull out the charts. Okay, so they will pull out the charts, right, and they will just look at a very low time frame, right. When I say low time frame, I means 4-hour charts, 1-hour charts, 30-minute charts, 10 minutes charts, right. Some idiots actually go into 1 minute charts or a 30-second charts. Okay, I don't know what they are thinking, but why look at 30 seconds, right? It doesn't make sense, right? Now, once they open the charts, right, for example a 1-hour chart, okay, then they will just look at the charts, right. Maybe, right, for example, they are looking at a Australian dollar US dollar, right, 1-hour chart, and they see that the rates actually going up, right. So the Australian dollar US dollar rate is going up, right. So they basically conclude that, okay, I should long the Aussie dollar US dollar pair. Why? Because the chart is bullish, right. The chart is bullish, right. That's why I long the pair. Okay, so once they generate this idea based on technical analysis, once they have this trading idea, right, they will just go through some basic computations, right. They will figure out what is the margin that they should use, right. What is the lot size, what is the contract size that they should use, right, and putting up their stop loss and the take profit, right, level, right, based on the charts. Okay, so once they done everything, right, so they generate their trade ideas from the charts and they do their risk management and computations, right, the P&L loss, right, with the charts, right. So once they done this, they call this a trade idea generation process, right. So once they're done, right, they will just go into the broker's platform and hit the buy button, right, and they are open, right, they are live, right, they're in the markets and they are buying long the Australian dollar US dollar pair. Okay, this is a very typical approach, right, a retail guy will take, right? Generate the trade idea from a chart, right? Do your risk management based on the chart, and go in and open a trade based on the charts, right? And once you open a trade, all you can do is really just sit and wait patiently, right? And sit, wait patiently, and pray to the God, right? So that the positions actually turn profitable. Okay, this is a typical approach. Okay, from a retail guy. Now, how do the pro generate trade ideas? Now, we are generating trade ideas in a very different way, right? If you have followed my work for quite some time, you will know that we generate our trade ideas from fundamental analysis. Okay, now, first thing first, right? We are going to download, we are going to find the data, right, for the economic indicators, right? For example, in the US, right, if you want to analyze the US dollar, for example, right, all we need to do is that we just go and find the data for business confidence, consumer confidence, building permits, right, the interest rates, the inflations, right? When we're talking about inflations, right, I mean the PPI, right, the all PPI, the all CPI, the core CPI, and the core PPI, right? So there are 4 different types of inflation indicators that we're looking for, and also the central bank balance sheet, right, the debt to GDP ratio, right, the total debt value, right, the government surplus or deficit, right, the interest rate, the bond yield, right, the sovereign bond yield, and also the GDP, right, the GDP growth, right? So once we find out the data, okay, so once we find the data, what we will do is that we will do a analysis, right, a distribution analysis, right, to find out whether how this indicator behave, right, how this data behave in the past history, right? So we are trying to figure out, okay, what is the normal behavior of this indicator, and what is a abnormal behavior of this indicator, right? And then we compare this, right, to the GDP growth, right? We are trying to find a correlation, right, between the GDP growth and this indicator, right? And then based on the correlations, we will build up a scorecard, okay? And then once we build up a scorecard, right, and we get the data, we done all of the analysis, we build up the scorecards, right? Now what we need to do is that we just update the data on a regular basis, right? So for example, the NFP, right, for example NFP, right, okay. Now we do the analysis, right, everything, we build the scorecards and everything, right, and every month once the NFP data releases, right, we just update our table, right, updates our spreadsheet, okay. And then using the data, right, we will give a score on the indicator, right? So for example, business confidence, right? Business confidence excuse me, business confidence, right? Okay, so what we need to do is that we just do the analysis, and we will assign a score, right, from -10 to +10. Okay, so negative means is deflationary and positive means is inflationary. Okay, so once we do that, right, we will assign a score to the indicator, to the business confidence, right, and then we will just do exactly the same process for all of the indicators, right, and then we will have a inflationary bias, right, or a inflationary perspective for the currency. Okay, so once we have the inflationary currencies, the inflationary bias on the currency, on the economy, right? We then compare it with other country, right? Because in forex, you must sell a currency before you buy a currency, right? Forex is always trading against another, right? So if you want to trade the US dollar, right, if you want to make money from the US dollar, you will need to trade US dollar against something, right? So it can be US dollar yen, right, or the euro US dollar, right, or the Australian dollar US dollar, right? You must trade something with the US dollar, right? This is how the forex market works. Okay. So for example, we are looking here is that Australian dollar US dollar, right? We are trying to figure out, okay, whether we should long or short the Australian dollar US dollar. Okay, so what we do is that we will do the analysis, right? All of the analysis on the US side and all of the analysis on the Australian side. Okay, and then when we will compare both currency together, right, to figure out which one is more inflationary than the other one, right? So we are trying to figure out, okay, whether the Australian dollar is more inflationary than the US dollar, right? So if we figure out that, okay, Australian dollar is more deflationary than the US dollar, right? So what we will do is that we will just short the Australian dollar and buy the US dollar. This is our fundamental bias, okay, fundamental view on the Australian dollar, US dollar pair. Okay, this is our fundamental view, right? He told us that, okay, we are fundamentally bearish on the Australian dollar US dollar pair. Okay, so this is where we generate our trade idea, okay, our fundamental view on the pair. Okay, now once we generate the trade idea, we then time our trades, right, with commitment of trader reports, right, the technical analysis and the price actions, right? We are basically timing, okay, to see whether we are late to the trend or whether we are too early, right, into the trends, right? Once we do that, okay, once we have a confirmed signal from the gatekeeping process, the timing mechanism, we then open the positions. Okay, so this is a very, very brief explanation on how professional traders around the world, right, professional traders in the hedge funds or on the prop desk, right, this is how we generate our trade idea. Okay, complicated, isn't it? You see, this is why 90% of the retail guy, they lose money, right? Because they are not willing to do the hard work. They are not willing to do the FA, the fundamental analysis hard work, right? And they basically generate their trade ideas, you know, like within 10 minutes, they will have a trade idea, you know, generated, and they're live in the markets, right? So they're basically trading the markets blindly without understanding the fundamentals, right? And I have records a few videos, and I have also working on a series, right, called Get Your Hand Dirty, right, where I show you the process in a much detailed way, right? Because let's face it, right, it's impossible for me, you know, to explain everything in like a 13 minutes, right, 15 minutes video. Okay, so make sure to leave me the feedback, and I will see you on the next video.